In a world where cash is dying and retailing continues its startling online migration, one of the biggest winners is the US-based outfit PayPal. It was bought by eBay 9 years ago to process payments, but now threatens to outgrow its parent, with 100 million customers doing about $100 billion worth of transactions a year. And of course, PayPal clips the ticket on every one of them. I spoke to PayPal's global boss, Scott Thompson, who was in Sydney this week. Well, Scott Thompson, while you're in Australia this week, the Reserve Bank, it emerged that the Reserve Bank is looking to cap surcharges on credit cards. Does that provide an opportunity for PayPal?
I'm not sure that it provides an opportunity for us. Fundamentally, the decision that will be made will be what it is. We don't particularly agree with surcharging on transactions online or transactions in general, because there's parts of that seem to be counter-competitive. But our value proposition stands on its own for consumers and merchants, regardless of how it's treated in that manner.
But is it fair to say that PayPal competes with credit cards, with online transactions? I mean, most online transactions are done by credit cards, but I guess you're trying to break into that field and get more market share. Is that a reasonable assumption?
There are people who believe we compete with credit cards, but the majority of transactions that are done inside the PayPal wallet are actually funded with a credit card. So we view ourselves as a great partner with the banks and the credit card companies. The vast majority of all of the first transactions a PayPal customer does around the world are actually started with a credit card transaction. And as a consumer ages in our franchise and uses us more and more and more, they put different funding sources in their wallet that they're comfortable with, and then they choose the one they want for any transaction.
So are you becoming a kind of international bank?
No. We have a wonderful international franchise. We operate in 190 countries today. We have nearly 100 million active customers and almost 9 million merchants. And so there's a lot of transaction activities that happen around the world, but it's payment activity, not banking activities by and large. So it isn't our intention to become an international bank.
PayPal started off primarily about eBay, doing eBay's transactions, which is why eBay bought PayPal in 2002.
Correct.
But now you're moving away from just eBay, right? Which I guess is why John Donahoe, the CEO of eBay, has said that you'll become larger than them eventually. Is that correct? Is that how you see the future of PayPal?
So we did in 2002. We were predominantly an on-eBay business when that transaction happened. We began building our what we call merchant services business in 2005. In 2006, we launched it on a pretty global basis. It now accounts for 2/3 of our total payment volume and more than half of our revenue, and it's growing very fast. And the public earnings documents would show how fast it's growing. And I think it's going to continue to grow very fast, and will actually, PayPal overall will be bigger than eBay at some point, and this merchant services business, which is 2/3 of total payment volume, will become 90% or 95% 3 or 4 years from today. So the opportunity is vast in that section of our business, and we're looking to continue to grow it very rapidly.
And what's the average clip that you take on the transactions?
It depends on the market that you're in, because there are different interchange schemes in all the markets. But across the entire business, it's about 3.6%.
And what's the clip in Australia?
Our published rate in Australia is 2.4% plus 30 cents, but we have other fee schedules that are specific to merchant relationships that go somewhat lower than that.
And who pays most of that? Is it merchants or customers?
No, the merchant pays that discount rate or that interchange rate. The merchant pays that fee. Similar to what happens with credit cards, that's how that transaction's funded. Consumers pay nothing in most cases for transactions.
Except on the price of the goods that they buy.
Yeah. But we, of course, don't set the price of the goods.
No, of course.
It's just a payment transaction, right?
And you operate in a lot of countries.
Yes.
What are the complexities of using lots of currencies? And does it cost more when you're trying to do a cross-currency transaction?
We do operate in a lot of countries, and it's very complex. It would be a wonderfully easy business to manage and grow if every country around the world was the same. But there aren't two that are alike. And policies and systems And everything is different in all of these countries. So what we need to do as we enter a new market is customize our services for that individual market and make sure that it all knits together. And so the way we look at it actually is that we sit above the payment infrastructure in most markets, and we make it better through software, which is PayPal. The second part of your question is the cross-border nature of our business. A very healthy portion of our business. On average, it's 25% of our payment volume, and that's growing very rapidly.
It's cross-border.
Correct.
Well, that's quite a lot. So, and what we're finding in Australia, as I'm sure a lot of countries are, that there's a tremendous amount of online shopping happening,
right.
And in particular from overseas now with the strong currency in Australia. What do you think the global proportion of shopping is being done online at the moment? And where do you think it's going to end up?
So I think two things. When we again, it's market by market by market. On average, online as a percentage of retail is less than 10%. So it's early days for online e-commerce activity. But there's a bigger trend that's afoot, and that is the lines are all blurring between online and offline and mobile and all these other things that are happening. So as we look forward in the future, we're beginning to articulate metrics which are just a percentage of commerce, because that designator of e-commerce or m-commerce or offline commerce is just going away. And so that's how we're looking at managing our business. As a percentage of total spend, mobile plus online, as we look forward into the future, will certainly be well more than 10%. And I think most people would argue it could be a third of total spend of the average consumer.
Right. I don't understand how the line between online and offline is blurring. What do you mean by that?
Historically, PayPal hasn't worked at point of sale in a retail location. You couldn't go into one of the large retailers here and see us as a payment option.
No, you just hand over your credit card or your
whatever it might be.
Or whatever,
yeah, exactly. And the reason why that has historically been the case is in those stores, those devices have been offline, meaning they're not connected to a network. Well, one of the big trends that's happening in Australia and around the world is all those devices in retail stores are actually now being connected to networks. And we view that as a massive opportunity for PayPal, because now we can be a tender type, an option for payment at point of sale, because that device is essentially a computer when it's connected to a network. So it's a fascinating, dramatic increase in the total addressable market for our services.
So are you going to issue PayPal cards, or is it going to be done by a mobile phone?
There are three options that we're working on for the consumer to engage us at point of sale. Certainly a mobile phone is one of those options, and there will be two other options that we offer consumers. They'll be unique. They're not going to ride the existing rails that the credit cards do. There will be a whole new experience, a whole new infrastructure, a whole new message format, and we think it's one that's dramatically better than what's there today for the merchant and for the consumer.
It's been great talking to you, Scott Thompson. Thanks very much.
No, my pleasure. Good seeing you.